Thank you very much for inviting me here. Yeah, of course. I was born in Punjab, a village called Bagana, not too far from Fagwara. And my father came here in 1963, and we arrived in 1970. So I've been in the country since then. Went to school first time in this country at the age of 8. So educated in the Midlands in Wolverhampton. And then 1980, I got my job in the bank in London. So I've pretty much been here ever since 1980. So 45 years in banking, finance, and property. So hence, the people call me the Mortgage Maharaja. So we're very experienced in finance and financial planning, insurances, advising business people how to grow their portfolios. So it's just grown from there, really. It's the experience. Yeah, we were in the West Midlands, Wolverhampton, and this is East Midlands, so it's great to be here. I didn't go to university, actually. I left my A-levels halfway because I got the opportunity in the bank. Back in the day, it was very rare for Punjabis or Sikhs to get into banking. There were no brown faces in the early 80s. Ladies, yes, there were very few men, and particularly men wearing turbans. So I thought if I can get in now, I'd rather expedite the procedure, not go to university, and then do my banking exams whilst in their employment. And I was lucky, I got the job, and I was one of the first Sardarjis pretty much in the bank at that time, at the age of 17. I did 10 years in the bank, 10 years. I worked my way up through the grades. I ended up being an assistant manager, which again, probably one of the youngest Asians ever to do that. And then I left the bank in 1990 to go into financial services, which is mortgages, commercial finance, etc., etc. My dream was to be an astronaut because I was just fascinated by flight and space and the vastness of the universe, and then appreciating how small we are in the bigger context, how short our lives are in a 14 billion year old universe. Average life is 85 or something. How insignificant human life is, and it's you have to make the most of it. My hobbies: I like watching TV. I like watching comedy. I'm actually an amateur stand-up comedian as well. So, but I don't play any sports. I don't have the time at the moment. But I do like watching tennis, cricket, obviously, being Asian. And football, World Cup football in particular. I don't follow Premier League teams, although I am a self-confessed Leeds supporter from my school days. But I don't actually go to matches. It's not my cup of tea. As you get older, you have different views. I got married actually in India. My marriage was arranged, and my beautiful wife is from Jalandhar, and we've been married 40 years last week. So we, got married at the age of 22. I'm now 62, so pretty much 40-year marriage. We did the Asian Anand Karaj in India, then we registered the wedding in the UK. She's a housewife now, but we've had businesses during our lifetime, run restaurants like yourself. So we've got the experience of business running and property buying and developing that as well. And I've got 2 children, Kiran and Seb. They also live with us. My father lives with us as well. My mother sadly passed away 5-6 years ago. So we're a family of 5 now living in South Buckinghamshire. The passion started really because of my love for property. I didn't really set out to be a mortgage advisor. Obviously, banking was a good foundation. I wanted to be an estate agent, in fact, because I loved property, I loved design, I loved the way people do their houses differently, put their personality stamp on their houses. And I really wanted to be an estate agent. So I did try my hand at that. It didn't go too well. But then mortgages came along because vacancy came along in a West London estate agency. I applied, I got the job, and since 1993, I've pretty much been in mortgages ever since. It's very challenging because obviously if you look at prices or the way the prices have risen, not just in London but elsewhere in the country, it's been difficult for first-time buyers to stay and keep pace with prices. Their salaries haven't gone up as much. Bank lending has been pretty tight. After the crash, there was hardly any lending. But slowly, banks are opening up now, and the government has instructed the FCA to think of ways to actually reinvigorate the market. How can they get first-time buyers on the ladder? And as a result of that initiative, banks are now lending more money for the same wages as they were before. On average, £30,000 more entitlement compared to last year for the same. Yeah, as I said, the bank has made it, or the Bank of England has, or the FCA, should I say, has told the lenders to go out and think of ways to lend more money. So we've had many lenders come out and say, look, we'll lend more money than we would have last year for the same income. So they've increased their lending multiples. And last month, we've had 2 new lenders come into the marketplace offering 100% mortgages, because one of the biggest barriers was deposit. And now you don't need a penny. There are some banks that require no deposit now. There are some banks that just require £5,000. That's all. So, so it's moving forward. Rates are rising, you're absolutely right. But historically, they're still not too bad. But we do expect them to drop later on in the year and also drop in 2026. No, it's true, because it's very hard for a first-time buyer now to get on the ladder. Now, there is some exodus from London towards the Midlands and the Northeast, Northwest, because prices are, in some cases, less than half price. So people are prepared to now move away from the centric London to other parts of the country to get what they want. And there are many schemes now in the marketplace. And this is where a good advisor who knows the market inside out can actually guide you, because sometimes it's not just your situation we look at as the first-time buyer. We can look at the family situation. And we can get your family members to support you on the mortgage application. You can get a friend to support you. There's so many ways to actually get on the ladder now, more so than there were maybe 5 years ago. Yeah, low incomes you can't do anything about. They've either got to retrain, get a second job, and once you've had that second job for 3 or 6 months, we can use that income as well as your other job. So income is a factor in mortgages. If you're buying a house to live in, you've got to prove your income. Now, that income has to be at a certain level to qualify for that mortgage. There's no getting around that. Okay, so you have to either get another job or get a better job, which pays more. Now, if you've got bad credit, that is an educational problem, I think, which stems from the lack of education in our schools. We don't teach enough for finance or real-day living issues to our children. They don't realize what a credit score is until it's too late. Now, they don't realize that when they buy a card, it's recorded. The payments each month are recorded. When they buy a car on a lease, the payments are recorded. Your gas bill is recorded on the credit files. So if you're late paying your gas bills and water bills, these are all going to affect you in life. So I think it's an educational problem, but if you've got adverse history, it doesn't mean you don't get a mortgage. Yeah, it depends on when it was, why it came about, because the high street banks will listen to reason. If there's an explanation behind it and the entries are not too big, they can be ignored. If it's habitual and you're late with your payments every month, you've got county court judgments and defaults, then it becomes a slight issue. But you might have to wait a year before you get on the ladder. But there are lenders who specialize in that space. You do pay a bit more, slightly more interest, but the funding is there. What it means is everyone has their own life, their own expectations, own aspirations, and their own needs. Now, people buy when there's a need. If you don't have a need, you don't buy. So if you're renting and you're being evicted from your property by your landlord, you might think, now the mortgage is going to be the same amount I rent, so why don't I buy? Because rents have risen massively since COVID. Once because of COVID and the shortage of supply at that time. Secondly, because of the bad budget by Liz Truss and Kwasi Kwarteng. The markets spooked and base rates went to pretty high levels. Landlords had to then put up rent to meet their mortgage payments on their buy-to-let properties. So they had no choice, otherwise they would be losing money. So those two reasons really escalated the rental markets. But I think, as you're right, there's no right to buy, no right time to buy, no right time to sell. It's according to your needs. I think the first thing they should do is approach somebody like me. Yeah, if not me, any local advisor who's obviously can advise them on their next journey, because the advisor will look at their circumstances, give them some guidelines as to what they can afford, given their credit profile, jobs, deposit level, so they'll have a fairly good idea what they can buy. And you can even go one step further by getting a decision in principle from a lender, which sort of gives you some surety you'll get the mortgage. So if you get to that stage, you can then pretty much go out and start looking for property. But it's good to see an advisor first. Otherwise, if you're looking for properties and then going to get the mortgage, that's the wrong way around. You get your mortgage in principle sorted first, then go out and start looking. These days, because of technology and the internet and the availability of information, you can go directly to a bank, or you can directly go to an online platform. But there you don't get advice. You don't get the face-to-face interaction. You don't get to discuss in detail. Everything is on email, so there's no human element to that transaction. And most of these organizations are not independent. If I go to you, for example, your Barclays Bank or whichever bank, you can't tell me what next door's lending, or Lloyds Bank, or Midland Bank, or ICI or HSBC. You're only going to try and sell me your products. So when you go to a bank directly, you don't get advice and you don't get choice. That bank will try and sell you their own products, and you don't know how that compares to the rest of the market. So you could be paying more than you need to, and that's why you need advice from somebody who's whole of market, who can look at all the banks and the builder societies and say, look, given your situation, this is the best product. Banks have thousands of products. If you look at a bank's product sheet, it's quite frightening. Each bank has about 200-300 products. Some will have no fee, some with a fee, some will charge a high rate, some will come with a free valuation. So there's a plethora of products available, and that's why you need somebody in the market, because we can't do it by human. We have computers, we have software that gives us pricing and true cost figures over a 5-year period. So you need a computer to actually do it scientifically. You can't do it yourself. And for a first-time buyer, typically, to get the maximum loan, banks prefer you take a 5-year fixed rate, because then they know you're going to be comfortable. Whatever happens to the rates for the next 5 years, if you can afford it today on your wages, you should be able to afford it for the next 5 years without any issues. So banks will lend you more money on a 5-year deal than they will on a 2-year deal. So your loan requirement also plays a part in which lender we go to. It's what it says on the tin. With an interest-only product, you are only paying the bank the interest. You're not paying anything towards the capital sum. So what you start off with is what you'll end up with in 25 years. You will still owe the bank that much money. So it's not a good way to have a mortgage, particularly if it's the house that you live in, because there's going to come a time when the bank's going to want their money back. And if you've not saved up elsewhere or invested in other properties to pay that sum at that due date, the bank's going to repossess. So interest-only mortgages on your prime residential property are very dangerous unless you've provided for the capital sum to be paid through some other mechanism. Repayment mortgage is better. You pay more than the interest-only equivalent because you're paying back capital, but the balance does come down every year, and eventually, in 20 or 25 years, you will owe the bank nothing, and the house is yours. And you pay less interest over that term on a repayment mortgage than you do on an interest-only mortgage. Hello, I'm Bob Singh, Managing Director of Chess Mortgages. Keep watching Brit Punjabi.